Hi, Sean from Mel's YouTube book site YouTube channel. Welcome to our next 101 lesson, 101 video on all core concepts of bookkeeping, broken down into little pieces and details so you can understand it. Short little videos. All right, so this video is on the capital control account and the assets control account. All right, let's get started. Watch my mouse. What is a general ledger? A general ledger is where all the financial transactions of a business records are kept that affect a related group of item entries entered throughout the months and year. For example, inventory, stock, purchases, sales, supplies, also known as accounts payable, customers, also known as accounts receivable, cash book, petty cash, assets such as a computer, cash register, etc., VAT or GST, and journals. All right, capital control account. Number one, the deposit of $15,000 from the owner to the business goes into the capital account as a loan to the business, and the owner will get the money back when the business is sold or when he retires from the business. All right, if the owner does not have the capital to run his business, he usually approaches his bank for a loan with interest and pays the agreed amount monthly over a period of time to his bank until the loan is fully paid off. So basically, all small businesses that start off, they don't have the money to run them. So the owner usually puts in 10, 50, whatever amount, and that just helps the business over a period of time. So when the business becomes profitable, it can start paying him back, or it can start, carry on its own 2 feet. So in the beginning, owner usually puts money in. So that's really what it is. So, the capital account, long-term liability. Money deposited in ABSA Bank from the owner as a loan. $15,000 on the credit side. The total loan, $15,000, loaned to start the business and owed back to the owner when sold, to put on the credit side in the trial balance. So it's owed back to him when sold or the business or he retires. Okay. Asset control account. Assets to a business is always on the debit side in the general ledger, and depreciation is on the credit side. Assets are used for the running of the business. Example: desks, chairs, computers, cash registers, filing cabinets, etc., and are paid including the VAT through the cash book. They are also motor vehicles, building properties, and plant and machinery assets bought by the owner. Assets depreciate over a period of time, and therefore you need to depreciate the items over a year at 20% of the original cost, excluding VAT. The depreciation of an item in the assets control account is made through a journal and then entered in the financial income and running expense account, not through the cash book. So assets don't keep their value over a period of time, so we buy stuff, chairs, tables for our business. And the thing is, over time, they lose their value. So we need to account for that, and that's where the asset control account comes into it. Assets control account. Assets are depreciated yearly at 20% excluding VAT. All right, so we start. Assets, office furniture at cost excluding VAT, $38.78 on the debit side. The depreciation at 20% per annum divided by 12 months on that office furniture is 58 cents on the credit side. Assets, cash register is another asset. Cash register at cost, excluding VAT, $43.48. The depreciation of that cash register at 20% per annum, which is divided by 12 months, equals 72 cents on the credit side. The total assets at cost price on the debit side came to $78.26. The total depreciation for 1 month on the credit side was $1.30. Total depreciation for 1 year is that $78.26 times 20% equals $15.65. Divided by 12 months comes to $1.38 per month. The total March assets were $78.26, which we debit the total in the assets for March to carry forward into April. Less the depreciation, as you see over there, the total net depreciated for 1 month is $76.26. Total depreciation $1.30 to put on the credit side in the trial balance. Total assets of $78.26 to put on the debit side in the trial balance. March do the depreciation journal entry $1.30 to put to income and running expense on the debit side. Okay, I hope this all helped you. Basically, your capital account is the money that the owner puts in to help the business along a period of time when the business is not making profit, just to get it off its feet. He puts in that money. And then the assets that we buy for the business depreciate over time. So it's not, you have to account for it somehow. Nothing stays at the same value. So that's where you have the asset control account, and then you apply the depreciation at 20% per annum. I hope that's the end of the video. I hope that this helped you out a lot. I really hoped. I tried to explain it as easy as I could, and I hope you understand that. All right, so we ended the video. Till the next video, please like this video. Please share it with everybody you know, and subscribe to our channel. We're doing a whole one-on-one playlist, all the accounts in bookkeeping, and we're breaking them down into short little compact videos so that it's easy for you to understand. So please subscribe. And also, please, very important, ask questions, leave comments. We're always here to help you. All right, until the next video. This is Sean from Mel's YouTube book site YouTube channel. Good day on you.